Alright, hopefully this is working because I have almost no memory on my phone, and I always can come up with really good excuses not to make videos, and it's been so long. So I thought, you know what, regardless of what happens, we're gonna make a video today. So that's what we're going to do. For the people watching me, my name is Isaac.duenas. I'm a mortgage loan officer in Cleveland, Ohio. And my goal of making these videos is going to be, oh my goodness, you gotta be kidding me. Oh my gosh, just a moment. Sorry, it's just, I have kids and they make huge messes. They put a potato and they squish the potato on the floor. Or whatever that is. Oh my goodness, the things that we deal with in life. Anyway, so what I was saying is the purpose of making this video is going to be to show you the real life interest rates, real life market from the perspective of a mortgage loan officer. So I'm licensed in 20 states in the United States, and I work for a national direct lender. So all we do is mortgages every single day. And purchases, it's a big deal these days. It's a huge deal. What I'm gonna show you right here, it's a big aha. And why do I say that? It's because I'm about to tell you the investor cash flow mortgage. And this is huge because when I learned this, I realized how many more opportunities we have there on the market. So check this out, okay? So the investor cash flow mortgage, it's based on, number one, your credit score has to start at 600. What do you mean at 600? Well, if if you have 620, 660, 680, 700, the higher, of course, the better. But in order for you to have this mortgage that I'm about to describe, you need to have at least 600 credit score. And now, what that means is we're gonna be looking at TransUnion, Equifax, and I always forget about this one. TransUnion, Equifax, and Experian. Okay? So then we're gonna pick the middle score. And if the middle score has to be over 600. All right? Number two, for this mortgage, you do not need personal income. You don't need employment. Isn't that mind-blowing? What I mean is, you don't have to have a 2-year history. We don't need pay stubs. We don't need W-2s. We don't need to see your taxes for the past 2 years. You don't need nothing. You don't need no proof of income, which this is the beautiful thing. Could you tell me how many lenders out there are going to be asking you for a billion things to verify your income, and then when you don't verify, they tell you something, there's nothing we can do, see ya, bye. So this right here is the dream mortgage for people because you don't have to verify your mortgage. You don't have to verify your income. I don't know what I'm saying anymore. It's late. All right, so this can be done up to 80% LTV. LTV is loan to value. For example, if the home is worth $100,000, the loan amount can only be up to $80,000. How much time do I have left? It can only be up to $80,000. What that means is that you need to come up with at least 20% down. So in a $100,000 loan, you have to come up with $20,000 to be able to put the down payment and qualify for this, which I get it. You know, you're gonna say, well, who has 20% down these days? Yeah, I know, I get it. But there's some people out there that have that money. And if you have $20,000 sitting in your 401k, in your IRA, in your pension account, in crypto, whatever, they get out, invest in real estate. Especially because this is just so easy. So easy. All right, so other thing. LLCs, how many banks? Well, I'm going to answer my own question, but there is no banks out there that you're going to get a conventional mortgage, an FHA mortgage in an LLC. It's actually against the law to do it. They put it under your name. They run your credit. in order for you to be able to put in an LLC. Why? For a billion reasons. I mean, the LLC can go bankrupt, and that's a big risk for the bank, right? But the chances of you going bankrupt are a lot less than if you do it with your LLC. There's just too many reasons. But the thing is that on this specific investor cash flow mortgage, you can put in an LLC, which is great. All right, let's continue. You can purchase an investment property. You can cash out an investment property, so you can take money out of the investment property, and you can rate on terms. So you can you can change the term of the mortgage or the rate of the mortgage. Those are some of the benefits of this. Sorry, somebody is here. I believe they're watching me because they always have to follow me, and this light doesn't let me see. No, nobody's here yet. All right, so loan amount. The minimum loan amount for this is $75,000. You're going to say, well, where do you buy, Isaac, these days, a home for $75,000? Well, they're still out there. I live in Ohio. I moved to Ohio for real estate. And in Cleveland, even though the market is wild, crazy, you can still find deals for $75,000. So that's the minimum loan amount. Loan amount, which is not the purchase price. So if you want to get a $75,000 loan, you probably want to do a purchase price of $100,000, meaning that you got to find a home for $100,000 to be able to buy, to be able to put a 25% down, 20% down, and that kind of stuff. Does that make sense? All right, and what's the maximum loan amount is $1.5 million. So yeah, I mean, coming up with 20% down for a $1.5 million is going to be tough, but hey, it's an option. It's doable. All right, so next, you're going to be qualified based on the property cash flow. That's when everybody says the cash flow is king. What that means is if you have a rental, and based on a market analysis, the rent amount on that specific area, let's say that is $1,000, right? That means that your mortgage payment cannot exceed, just hold on. This is kind of new to me. So your mortgage payment cannot exceed 100% ratio. Let's put it like that way so you understand it. That means that if you have a cash flow of $1,000, the mortgage payment has to be $1,000. It cannot be $1,100 because it would be above the cash flow that you're receiving, so you would be disqualified. So it has to be between 0.85 and 1 and 100% of the, it has to be between 85% of the rent amount and 100%. And of course, now I have Rocco, my son, that has to walk right in front of my video because this is the time that he has to do something here. Let me pause this. All right, so 85% of the mortgage, so the rent amount, if it's $1,000, your mortgage has to be a maximum of, let me put this to you in a better way. So if your mortgage payment is $1,000, your rent amount has to be between $850 and $1,000. So it has to be between 85% of the mortgage amount to 100%. Does that make sense? So that's how you're going to get qualified. And you're going to say, well, Isaac, how do I now the rent market analysis of this specific rental that I have? The reality is that when you pay for the appraisal, the appraiser will appraise normally around 3 homes, so 3 rentals. Each rental produces different cash flow. So it will analyze those rentals, it will compare them to your rental, and it will determine a rent market value. And using that market value, that's how you're going to be qualified for this specific investor cash flow mortgage. All right, so the next thing is non-warrantable condos allowed. So if you had a condo, if you bought a condo, if you live in a condo, if you wanted to buy a condo, you will realize that it's very difficult to get condos. Why? Because normally people don't have 5% an app for a down payment, so they normally are looking for FHA mortgages. So an FHA mortgage will give you the option to put 3.5% down, which is the lowest. Normally, there's other exceptions to that, but it's normally the lowest amount that you can put for a down payment. So there's lots of condos that are FHA approved, but they normally approve them when they are a brand new construction. I think that it's kind of like an incentive for the condo to bring new people into the condo. That's my dryer or my washing machine, who knows? So it's very difficult to find condos that accept FHA. And sometimes it's also very difficult. Sometimes you can run into problems getting a conventional mortgage. So with this investor cash flow mortgage, you can buy condos that don't meet those government criteria to be able to get government mortgages. Does that make sense? And to finish, short-term rentals and VRBs are okay. You cannot do no condo hotels. You know those hotels that they look like condos, that they have different units right next to it, like a condo, but a hotel. You cannot do those, but you can do short-term rentals, VRBOs, and this is the crazy part. You can get a 40-year fixed rate interest only mortgage. What that means is that if you don't really care about paying off that mortgage, all you care is about, look, I just want to use this real estate to produce cash flow every single month. I could care less about how much debt I have, about the balance, about everything else. So I want the lowest payment I can have and collect as much rent as I can have. So you just want to sit your money there, sit your 20% down so that it can produce cash flow. You can milk the real estate. Does that make sense? So in those situations, you probably would be good getting a 40-year mortgage, fixed rate, interest only, to milk that cow. Anyway, I thought it was amazing. I am going to do one of these mortgages this year. I'm gonna go to Cleveland, I'm gonna talk to people, I'm gonna try to find a rental that is not in the MLS if possible. And I'm gonna try to talk to a seller, negotiate some kind of price, and I ain't gonna freaking put, okay, I don't have too much time, but if you put 25% down, then they don't even, 25% down, and if you have a credit score above 700, they will not even look at the rental market analysis. That means is they could care less about how much money you can bring on that thing in rent. If you put 25% down and you have over 700 credit score, you qualify, you're approved, let's go. Anyway, what do you think about this specific mortgage? By the way, this is for investment properties only. You cannot do it to buy a owner-occupied home. I'm running out of space, running out of memory. Please subscribe to this channel because we need more people rolling. I'm gonna make more videos like this every single day. I'm just gonna ramble. I'm gonna tell you what I think about the market, how I feel that the market is going. Today was absolutely awful, by the way. Interest rates are still through the cloud and they keep going and climbing. I think it's crazy when people call me saying, hey, I want to refinance. I didn't do it 6 months ago. But all of a sudden I feel that now I want to do it. You're crazy. Anyway, thank you for watching. I hope you guys have a good night. See you, bye.